Hello YouTube, I hope that you're well. This month of December, I haven't been able to talk to you about STEP Index, and you know how December is. We basically don't have time for the charts. It's the busiest month of all, right? So I do apologize for being absent. I haven't been able to look at the markets, and it is what it is, eh? So for all of those that don't know, I'm into retail. My job is basically taking a toll on me around this particular month, December. It's the busiest month ever. So that's why I haven't been able to post anything. But anywho, we are looking at STEP Index on a daily time frame. And I have to say, wow, this is the lowest that we've ever been on STEP Index. We are trading at 7,809. My goodness. So for the rest of the year, after June's price action, let me zoom out a little bit. June is here. So after June's price action, price displayed a bearish market tone. And if you look at the previous commentaries, I have been primarily bearish, right? I have been bearish, and if you look at a video that I produced back in July or June, somewhere there, I was calling price lower. The video is called The Seasoning in a Stew, and I was calling price lower, basically explaining to you why I am bearish, but I did not expect it to be this low. Okay, this is the lowest that we've ever been. And I tell you what, even though I'm a swing trader, I am not in a short position whatsoever. Okay, I tell you that. I have to be honest. I am not in a short position, though I knew that the market would plummet like this. And for the reason being, it has been stated on The Seasoning in a Stew. Yes, I am promoting my work. Okay, so let's zoom in a little bit with what happened in December's price action. All right, so going back to the November's price action, the previous month, particularly the month end, which we do know that it tends to be a counter trend type of environment. So we've had the 20th price action, and then after the 20th, we had this retracement back into the opening of November. So we retraced all the way back into the initial fair value gap of November. This was the first inefficiency for November's price action. We visited that particular fair value gap multiple times. We visited that fair value gap here and in the mid-month, and also we visited that fair value gap around the month end. And you actually saw me take a counter trend trading idea in November's price action. All right, I was following through with this retracement, and my last commentary for November, I believe it was commenting on this price action that we are going higher into this inefficiency here, or this particular high, which is the mid-month high of November. If you want to trade the counter trend model, then the target is always the mid-month high or low. All right, so after we took out that particular high the mid-month high of November, I've been quiet ever since. All right, I've been quiet ever since. And we've had the opening for December being bearish up until here. So this is the lowest that we've ever been for STAP index, 7,800. Damn. Well, guys, I'm not in any short trade, all right? But then if you wanted to be bearish for December's price action, this would have been a nice trending environment. So if I was bearish from the opening of December, or if I was bearish in the mid-month of December, then around the 20th price action, then that is when I would close my short position. The reason being is that around this particular time, the 20th, that is when the market tends to go counter trend. I'm not saying that the counter trend idea will perform or will show itself at this particular price action for December. I am not sure that it is going to do that. However, if you want to follow through with the counter trend model that tends to happen around the 20th, then you have to look at particular signs or confirmations that tend to be obvious around the 20th. But so far for December's price action, I am not seeing that display of price action. All right, the confirmations tend to be breakaway gaps that tend to go counter trend, right? You're looking for counter trend ideas. So it has to show itself to you that it wants to go counter trend. But in this formation of price action, I am not seeing that. All right, we are trading the lowest price on STAP index. So the primary direction that you have to be following is going bearish. You know how guys talk about the market being at an all-time high? Then STAP index is at the all-time low, the lowest that it's ever been. So for me to talk about a counter trend model is out of the way, okay? Unless the signs are there, then I will talk about it, but I am not seeing that as of yet. However, I have to comment on the current price action. All right, so let us zoom in a little bit. Okay, so the very first thing that comes into mind when I look at STAP index at the current price, I do see this particular day going bearish, taking out the 20th of December's low. And if you notice where we are trading in this particular day, we are inside of this particular day. So basically, we are trading at an inside day. So we are inside of this candlestick. That's the high. And down here, we have the low. Do you see that we are still inside of this particular day? ICT teaches that you can still trade within a particular defined range. So we are still trading inside of this day's range from this high down to this low, right? So we opened and we traded up into this candlestick, okay? So I'm going to mark out the low of that candlestick. And I'm actually going to change the color, make it black, right? So we hit this particular low and we are making our way to this particular low, right? But there are some things that I want to see in the lower time frames inside of this particular day. So let's drop down into a 4-hour time frame. Looking at the 4-hour time frame, this is the low of the daily time frame. and this is the high. We are still inside of that range. So we can define this particular range high to this range low. Okay, this is where we are. So we've retraced all the way back into the 50% here, right? Isn't this a coincidence that we've made this particular high at the 50%? This is amazing, man. So if I were to be bearish, I would want to see price action remain below the quadrant 50% of this particular range. Should it get above this particular 50%, then that would qualify a contra trend model coming into fruition. So the characteristics that are associated with a counter trend model would be if it gets above this particular high. And how it trades above this particular high is also important. But we are not seeing a counter trend formation at the moment because price action is still below this 50%. And as I said, we are making our way to the downside here, right? So let me pull out the time separators. Okay, today it is a Tuesday. Yesterday was a Monday, and on the 21st of December we had a consolidation, and Sunday begins a new trading week for STEP index or for synthetic indices. If you guys didn't know, just know that Sunday begins a new trading week. So we started out with a consolidation, and then on Monday we made a new higher high, took out Sunday's high, boop, right? And we've made our way to the downside. So if you've been following this YouTube channel for a while, you know that I like to look at the very first inefficiency of the particular week. So up here, we have this inefficiency here. I like to call it the new trading fair value gap. Okay, it's a new week fair value gap, right? So that's our new week fair value gap, and so far it's still remaining open, right? And what I teach about these types of fair value gaps is that price action will want to go inside of that particular inefficiency. All right, that's what I teach. It tends to do that. Okay, this inefficiency is above the 50%. So we are at a premium relative to this high and this low. We are above the 50%. So this fair value gap is at premium. And below the 50% is a discount. Okay, this is cheap and this is expensive. Okay, so that's what we have on the 4-hour time frame. Nothing extravagant. Okay, let's drop down into the hourly. So looking at the hourly time frame, what can we get technically from the hourly time frame? Well, this new trading week fair value gap, we can redefine it into the hourly inefficiency. We can take it up there. As you can see, it's above the 75% quadrant level. And up here, we have this bearish order block here. Down here, we have these relative equal lows. And as you can see, we are purging those relative equal lows down here. Okay, we are now trading at 7,807. Okay, we are going to sweep this particular low, and then from here maybe price action will resume its formation for, you never know, a counter trend idea. But I am not promoting the idea that it is going to happen. Trust me, my guy, I am not doing that. Because of this 50% display of price action here, the counter trend idea, we put it aside for a bit. Okay, so then we've made our new lower low. We are trading at 7,807, the lowest that we've ever been. Okay, so let's see the 15 minutes time frame. Okay, so here is our 15 minutes time frame. We can clearly see that we are making our new lower low. So in a market that is at an all-time low, you want to be following through with a bearish market tone. You don't want to switch your bias. Okay, you just want to be going, following the trend. You know the saying, the trend is your friend. Well, this is it, guys. You want to be following through with the trend. Unless anything happens, then I will update you guys. So this is it for me. I will see you guys in the next video.